Good morning, everyone. Thanks for joining us this morning. As we hit 10 o'clock here and a few more folks are joining, I thought it might be helpful for all of us to just take a quick look at the Division of Local Services, what we do, who we are. Just to quickly introduce myself, my name is Frank Gervasio. I've been at DLS for about 2.5 years now, working on a few different things, including our training initiative, which is what we'll be focusing on today. So if you were to go on our website, mass.gov/DLS, you'd see our mission right at the top here, which is right on this slide as well. DLS promotes sound municipal finance management practices and supports local officials by providing guidance, training, and oversight. So this morning, again, we'll obviously be focusing on that training aspect as we dive into this excess and deficiency webinar that BOA is going to be providing. So we achieve this mission through our 5 different bureaus. First, the Bureau of Accounts. We'll be hearing from staff from BOA this morning. The Bureau of Local Assessment, who deals with local property tax local property valuation. The Data Analytics and Resource Bureau, they do a whole bunch of stuff. They manage our data bank, which is on our website. If you haven't visited, I would highly encourage you to do so. Lots of good information on there. They handle local aid. They manage Gateway, which I'm sure a lot of you are familiar with. So a lot of stuff going on at DARB. The Financial Management Resource Bureau offers free consulting services to cities and towns across the Commonwealth. You can visit our website and see all the financial management reviews that they have done recently. They help prepare capital plans and financial forecasts and all types of stuff, really. And then there's our Bureau of Municipal Finance Law, who offers legal guidance on a wide array of municipal finance topics. All of that guidance, again, available on our website. They also offer an attorney of the day service for local officials as well. So again, I'd highly encourage you to visit our website, mass.gov/DLS. You can see guidance from all of our bureaus. You can visit our Municipal Finance Training and Resource Center as well, that we're constantly trying to update and add to hopefully help not only new local officials, but also the seasoned municipal finance professional who might need a refresher or wants to learn more about a different function of city or town government that maybe they're not entirely familiar with. Just to start, before I turn it over to the Bureau of Accounts folks who will be presenting this morning, I do just want to remind everyone that this presentation is being recorded and will be available on our website and on our YouTube page for reference after the fact. So be able to find it there along with the presentation itself. And I think that's all I've got for now. So I'm going to turn it on to Andrew, who's going to start with our presentation this morning.
Thank you, Frank. I am Andrew Nelson with the Bureau of Accounts. I'm joined by Katie Scopoletti here, who will be helping me on this presentation. I'm going to do the first piece, and she's going to do the second piece. I think our intention is we're going to turn off the video of us, so you don't have to look at us, and you can just concentrate on the presentations. So I will keep talking, but you are not going to see me anymore. We'll come back for the question and answer portion. If you have question and answers or questions, put them in the Q&A function there, and we will read them at the end and try and answer any questions you have on this. So that would be the place where you should have anything you have. You can put them in as we're going along, or you can wait till the end, however you want to go, but we will revisit all of the questions at the end. So we're going to talk about how you fill out the paperwork for your E&D submission every year. There are a number of forms you have to submit through the Gateway system. You have to submit the balance sheet checklist, the treasurer's year-end cash report, the cash reconciliation report, the statement of indebtedness, and then the balance sheet submission, which contains a combined balance sheet template that we provide and you fill out. You have to provide a system-generated trial balance, that is from your accounting system, and a system-generated undesignated fund balance analysis. I'm going to talk about the last 3 there, and then Katie will talk about the others. This is a picture of the Gateway system, what we call the landing page for the district balance sheets. The district balance sheets is for schools that are doing E&D, or for special purpose district, water district, fire district, sewer district, something like that. So they're both grouped here. The forms are those blue numbers, those blue links down the bottom you see there. It shows the very bottom one you'll see is the combined balance sheet template for the regional school districts. That's what you folks would want. You click on that, download it. There is a new one every year. We give it, there's a new color. When we move to the thing, you'll see there's a color on it, and there's a new color every year. So you shouldn't be using and rolling over the same one annually. There are changes made to it on an annual basis, so you'll want the newest copy of it. One way to look at it is color. If it's the same color you had last year, then you don't have the newest version, and you should go back and download it. Last year was green. I believe the new one is orange, but I'm not 100% on that. You'll see where I mean on the colors after. You can also get the statement of indebtedness, treasurer's year-end cash, and your checklist. On this page, you'll want, again, the regional school district checklist. The other forms that I mentioned are directly in Gateway. They're not spreadsheets that have to be downloaded. Next, please. This is the regional school district balance sheet submission page. This is where you actually submit, sign and submit once you are completed all of the work you have to do. It shows the status of the other forms. Those are the supplemental forms I mentioned that Katie's going to talk about that you have to fill out. You'll see in the middle of the form is the balance sheet checklist, the year-end cash report, the cash reconciliation, and the statement of indebtedness. Those have to be in submit form. You have to have completed those and submitted them in Gateway, or else you cannot submit this page. If one of those is just in upload, or if it has not been done at all, it will not allow you to submit this. When you do submit this page, we get notified that your balance sheet has been submitted. It is also best to send us an email too, just to give us a heads up that you sent it in case we miss it at a busy time. We're getting a lot of these at the same time. We may miss, it may get pushed down our notifications far enough that we could miss it, but an email is helpful. It's not absolutely required, but it is helpful and a good idea. You'll also notice under the section marked current documents, there are 3 uploads there. Those are the 3 things I said you had to upload. Those are, you're going to take that combined balance sheet template that you downloaded on the last page. You're going to fill it out, complete it, and then you upload it here for us, so we get the completed version. You're uploading your system generated trial balance here and your system generated undesignated fund balance detail. Once you upload all of those, you sign. You can't really see the signature on this well, but it's right there. You see accountant auditor heading there. There's a box below it. You would check that. You have to have a Gateway account to be doing all of this. If you don't have a Gateway account, there should be an administrator in your district that can set you up with one. If you don't know who that person is, or there isn't one, you can reach out to the data bank here at DLS, or DARB, I guess they're called now. DARB, and they will set you up with an account if you are new to the district. Next page, please. So this is the top half of the combined balance sheet. It is broken out. I think we've got slides here for the asset section, the liability section, and the fund balance section. This is the asset section up top. We have tried to put in everything you would need here. If you need to add something because your district has something unique that's not allowed here, that it is not provided here, sorry, you can add that line. I don't think you'll need to add a column ever, but you could add a line, a row that you need to explain something that wasn't provided. You can delete things if you want to make it smaller for yourself, things that you don't have. If you don't have certain things and you want to delete them, if you don't have, an internal service fund or something, you can take out a column, you can take out a row if you want. You don't have to do that. You can leave it as is. We do caution you, if you are deleting or adding things, to be careful. There are formulas in this sheet. If you just delete or add a row, usually you're okay, but be aware that there are formulas in here. If you do it in a non-traditional way, you could end up knocking a formula off and things may not tie. So in this section, you're putting in your cash and your receivables are the most common things that most of you are going to have. And this should be filled out as your books are. If you're someone that keeps all of your cash in the general fund and use due to, due froms, then that's how it should be reported on here. If you keep the cash in the individual funds, you know, special revenue has their own cash balance in there, then you would list it the way it is listed here with the $4.6 million of cash in special revenue. But if all of that money, if you're, we do see a lot of districts where that whole $17 million of cash might be in the general fund. And if that's the way it shows on your trial balance, that's the way it should show on here. Put the 17 million in the general fund and use your due to, due from other funds line. The due to, due from other funds line needs to net to zero in that final column, in the totals column. So you shouldn't have anything there. If you have a due to, you have to have an offsetting due from somewhere else. You can show it. Some people show it all on the same line in the asset section or in the liability section. You'll have a negative in one column and a positive in another column. They net to zero in the total. Some people put all of the due tos in the liability section and the due froms in the asset section, which is fine as long as the total column offset each other. You know, if you have 100,000 as a due from, you should have 100,000 as a due to. You see that green box there for the fixed assets. That's the color I was mentioning. That shows that this is the 2021 balance sheet. It should be, I believe, orange in the new one that is coming out, 2022. That's how you know if you have the newest version. We do not want your fixed assets in the general fund. That is why the green box is in that thing. You should not be filling out that box. If you want to put your fixed assets on the combined balance sheet, they should be in the long-term debt group, which is the final, well, not the total column, but the final column before the totals. We do not need your fixed asset information. If you do not have to provide it to us, but if you do provide it to us, it would go in that long-term debt group column. Do not put it in the general fund. We do not want to see any debt in the general fund. There are very few exceptions where debt is allowed, mostly deficit bonds. You should not have debt in the general fund column. Next slide, please. The liabilities. So this is the middle of the template, and you put in your liabilities here. A couple of things I want to point out on this is there's a notes payable and a bonds payable line on here. Notes payable is your temporary debt. That is generally going to be in the special revenue or capital project funds, usually in the capital project fund, could be in special revenue. Bonds payable is your long-term debt. That is going to be in that long-term debt column, which is the second to last column, one right before the total column. If you have vacation and sick liability, if you set that up, that's usually in the long-term debt column also, should not be in the general fund. There is the other due to, due from line here in the liabilities. If you wanted to set them up and use due tos and the due from separately, then that one would have to offset the one that is up in the asset section. Next, please. And then this is the bottom third of the combined balance sheet. This is the fund equity section. You're going to have your undesignated fund balance, which is the line right above the green box. Your other common reserves you're going to have, and I'm going to get into more of that when we get to the analysis of the of fund balance. I'll get into the different reserves and things, but most places are going to have a reserve for encumbrance. If you vote any E&D for the upcoming budget, so if you right now you're about to go into financial year 23, if you voted some of your E&D from this year, that's going to be reserved. It is a reserve for expenditure. The only thing that should be in reserve for expenditure is E&D that has been voted for the upcoming budget. or any revenues, but well, not any revenues, but any reserve revenues. In most cases, it's going to be E&D that are voted for the upcoming budget. That would be on your reserve for expenditure line. If you have continuing appropriations, if you voted some money for, if you voted some capital money and the project is ongoing, that money is going to be in, and this isn't a long-term capital project. This is, you know, you were doing a small project, you were paying for it out of E&D or out of a budget appropriation that year, and you didn't complete it by the end of the year, you're carrying that money forward, it would be a continuing appropriation. If you have any debt service money that you reserved, it goes on the debt service line. If you have premiums under the old system, they would go on this line. Premiums have changed. There's an IGR on it. If you have questions about that, you can contact your field rep or just consult our website. There is an updated premiums IGR, a bulletin out there that has the information on that. Other than that, next slide, please. If you have multiple general funds, so when I say that, some places just use one general fund. That is the most common way to do things out there. But if you use a separate general fund, you have a Fund 02 or something that you use for encumbrances or for some other item. In schools, it's usually just the encumbrances is the other fund. In towns, you see a little more variation. But if you have a separate fund for encumbrances or you're using it for some other purpose, there are other general funds you could use, and we do see them, and they're not rolled up into one general fund, then you need to complete this tab of the template. And the total column of this tab should be what ties to the general fund column on the combined balance sheet. But you're going to have to provide the trial balance for each of those general funds. So if you have two general funds, you're going to have to upload two trial balances. Trial balance for the Fund 01 and the Fund 02 or whatever you're calling it. And those should tie to this spreadsheet. And then this spreadsheet would tie to the combined balance sheet that we just looked at. This isn't the most common thing, but we do see it in, I don't know, 20% of the school districts out there. So if you have questions on that, on it, or any of these things, you know, that you think of afterwards or while you're working on it, please contact your field rep and they can help you with this. This is the general funds accounts receivable detail. This is more common in the school districts. We have this. If you have things that are just listed as accounts receivable or departmental receivable, pretty much any of your receivables there, you need to fill this out and show us what it is. It might just be one line like this, and that's fine. But it also may be multiple things, and we need to, if it's multiple things, we need to see them broken out so we can tell what they are, what the different balances are. And you fill this out. If you have if they're deferred, you put the deferred revenue column, you fill the deferred revenue column in. If you receive the money before September 30th, it would go in the receipts through December 30th column. If you did not receive the money and you did not defer it, then that accounts receivable is a hit against your E&D and will reduce your E&D if you neither deferred it or received it by September 30th. You may have multiple receivables. Some of them may be deferred. Some of them may be received. That's why we need this detail, this level of detail here, so we can see what is accounted for and what is not, and what would be a hit to your E&D. Next slide. So each of the columns after the general fund have a support tab in the template that you have to fill out. The tab for each of the support funds, this one being the special revenue, have to tie to the combined balance sheet. So the total on the combined balance sheet should equal, in the special revenue column, should equal your tab for special revenue. And we're going to provide these slides to you folks afterwards. They'll be available, so you have them. You can look at things. We think everything ties out exactly as it should, so you can see, oh, that number's here and it ties out to something over here. You should be able to use it as a reference guide going forward. There are two funds there that are yellowed and have arrows next to them: the Regional Transportation Reimbursement Fund and the Circuit Breaker Fund. Not everyone has either of these, but if you have them, you can only carry up to what the district received in those funds the previous year. So your balance can't exceed what you received from the state in those funds previous year. So, and we have a list with both of them. We will check it. If you have more than that, then you have to close it out to the general fund. If you have an equal amount of what you received the previous year or less, then you can carry that balance. We will check those two numbers and see what the balance is and see if you've exceeded it, and that money would have to be closed out. We also, for this year, and it was for last year and it's for this upcoming year, we wanted to point out that there will be no hits for any deficits related to COVID, anything that is a FEMA deficit or CARES Act or ARPA, anything like that. If you have monies, the ESSA money that the schools received, if you have deficits in those accounts because you're waiting for reimbursement or you're still filing paperwork or reconciling things, whatever reason they resulted, there will not be a hit on this year for the E&D process. And we'll update that annually. I'm sure at some point that if you end up with deficits out there, they may end up a hit to E&D, but that hasn't been determined, and that timeline hasn't been defined. As of right now, you're allowed to carry deficits in there. I know there's a lot of moving parts and rules are still evolving and changes are happening. So there are no hits for anything related to COVID that way. If you have deficits at June 30th, but you receive the money from the state or from whoever else subsequent, you can take credit for any monies you receive up to September 30th. There's a column there for that. You just fill that out and put that number in. If it eliminates the deficit, you'll see there's a special ed allocation line there, line 21. They had a $34,000 deficit. They received $128,000 later in the year, but before September 30th, that wiped out that deficit. It did not end up being a hit. You get out a little further, line 320, they had a Title I deficit of $4,100, but did not receive that money. So that ended up, that number, that $4,100 would be a hit and a reduction to your. If you have a ban for something in the special revenue that covers up a deficit, you would put it in the ban column here. Those aren't common in special revenue, especially in school districts, but they are allowed and they can happen. If you did borrow for that, you would enter it in that field. Next slide, please. Just like with special revenue, the capital projects need to tie out to the combined balance sheet, so that negative $21 million that is in the capital projects fund would tie to the combined balance sheet, which is going to show up a negative 21, 228, 25, 40. And we look at these, the capital project, all of these details need to be broken down to the lowest level. So you can't just have a line for capital projects and group them all together. Each individual capital project should have its own line. Same thing with special revenue, trust funds, all of that. If you have multiple years of the same SPED grant, you have to break down each year of that SPED grant, or multiple SPED grants. Each one has to be listed individually on its own line. You can't just, group all of the same SPED grants for 5 years into one line. They have to be broken down into their individual fund per year so that we can see them here. So on these capital projects, you can see they had 5 of their 6 capital projects ended the year in deficit, but they did 5 bans to cover them. They listed them, the bans individually related to each of the projects. In each case but one, the ban exceeded the deficit they had, so there would be no hit in those cases. In the case of the roof project, window HVAC project, which is project 87, they did not ban quite enough. There was 98,157.74 remaining in deficit. That number would also be a reduction to your E&D. Next slide, please. If you have trust funds in the district, a stabilization fund would be a trust fund. Your OPEB is a trust fund. Some places have many trust funds. They're trusts that were set up by folks to have scholarship funds or something. Those would be listed here in the trust fund. Each one of them gets their own line. They're broken out individually. Some places have a lot of them. Some places have very few. You can see this district we use here only had the one. They only had OPEB. And that 565,245 should tie out to the trust fund column. Next, please. Agency funds. Agency funds are money that does not belong to the district, but is basically held by the district. It can pass through money. Any of your withholding taxes could be kept in an agency fund, something like that, money that you collected for a state or you were holding for another group. In this case, student activity, it belongs to the students in that school. It is the checking account that is handled by those things, but they're in possession of the district. So you're listing them here in the agency fund at 219,349. This number can be shown in two places. There is an agency line. There is a line on the combined balance sheet that says agency. That is the preferred place for it. It is in the trust and agency column. Well, the agency line works all the way over, but in the trust and agency column, you would want to use the cell that corresponds to the agency row in the trust and agency column. And that's where you would put the 219,349. We also would accept it if you just put it down in the fund balance section of the trust and agency column. And then we would have to add the trust and agency totals together to get what's on there. We prefer it be listed in the agency line on the combined balance sheet, but we will accept it if it is in the fund balance section with the trust and agency column. Next slide, please. Internal service funds. Not everyone, most districts, I shouldn't say not everyone, most districts do not have them. Some do. The most common internal service fund is if you're self-insured. You do not. You do your own insurance, your health insurance is paid for, and the risk is mostly taken by the district. If you have an internal service fund where you're retaining money for a health service fund, you treat it as an internal service fund, it would be listed here. The key line that we need here is the Ibnr, which you'll see is the second line in the liability section. That stands for incurred but not reported. These are the claims that happened late in the calendar year. So if you haven't received all of the information back from the hospital or the healthcare provider or whoever provided the service yet, someone fell and broke their arm on June 27th. So it's an expense. They went to the hospital on June 27th, but you don't have that paperwork as of June 30 when you're doing it. You need to get that. You'll get that information from your provider later in the year, probably in August sometime, before you do your balance sheet, and you would put that number here. Your Ibnr has to be smaller than your outstanding fund balance. If that's money that was needed to be covered by your fund balance. If you do not have enough in your fund balance to cover the Ibnr, then that amount would also be a reduction to your E&D. There aren't a lot of school districts still that are self-insured, but there are a number of them, a small number of them. The other examples of common examples of internal service funds, again, not a lot of schools have them, are workman's comp and unemployment compensation. And not everyone treats those funds when you have them as internal service funds, but those are the most common internal service funds. The total of this internal service funds sheet template has to equal the internal service funds column on the combined balance sheet. Next slide, please. So this is the undesignated fund roll forward analysis. You have to fill this out in, it is a tab on the template in the combined balance sheet template. You fill this out, and then the support for it is the analysis that you folks upload on that first section. I told you there were three things. You had to upload: the combined balance sheet, the system generated trial balance, and the system generated undesignated analysis, which is what we use to work on this. This form you can think of as being broken up into three sections. The top third, which is the beginning number down through that 6,189,000 number. That top third, that is exactly what appeared on last year's balance sheet. It should not deviate from what appeared on last year's balance sheet. Take the numbers that were in the fund balance section of the general fund on last year's balance sheet that you submitted to DLS and put those numbers on here. So you're going to have your last year's undesignated, and any reserves you had would go there, and that total should equal what was on last year's balance sheet. The middle section, which is that next ellipses there, is any reservations you have on this current year's balance sheet. So if you have encumbrances, reserve for expenditure, continuing appropriations from this year, they list in that middle section. You're going to put them down. That's exactly as they appear on this year's balance sheet. And then the bottom third down here is where we're going to, this is your closing entries, basically. This is where you're going to reconcile things out. The most common things, everyone's going to have a revenue closeout and an expenditure closeout. That should come from, it should be listed on your system report. Most of you have, most schools use the same system, not all of them, but most of them use the same system, and you get a very nice printout at year end that shows your total revenues and your total expenditures. That number should go here. If you had any other financing sources, any other financing uses, if your auditors made an adjustment after the year end, if something changed at the end of the year, you would put that in this section here. And the number, this sheet should all total up to what your current undesignated fund balance is. So the undesignated fund balance that is on the combined balance sheet, that is in your trial balance, should total up to the bottom of this section. If you had a change after you submit to your balance sheet, after you submitted it to DLS, and after we went through and certified your E&D, your auditor changed something, or you had to go back and make a period adjustment to something because you found something subsequently, those changes are going to go here in the last third. You're still starting with the fund balance, the beginning fund balance that you had on last year's balance sheet. Don't go back and put what became the new fund balance up top, or we're not going to be able to reconcile through. You need to have the change happen in the bottom third. Next slide, please. So I'm going to go through a little thing that is, we've had problems and trying to work with a lot of the districts here on encumbrances has been a thing that's caught a lot of balance sheets and held them up in the last few years. All purchase orders for goods that are not paid before the July 15th date should be encumbered. They should not be expensed. So if you haven't paid them by July 15th, you shouldn't be putting that PO in your expenses. You should be encumbering it as a piece of fund balance. Purchase orders should not be expensed until they are actually paid. Next slide, please. During the June 30 year-end and closing process, all purchase orders and outstanding obligations for goods should be set up as an encumbrance against the appropriate budget line item. We've seen a lot of places, and we think it has something to do with working through the end of year report. And we've spoken to Desi. We've had a conversation with Jay Sullivan over there, who's in agreement with us. We've spoken to the Mass Society of CPAs, the audit group that is made up of the folks that audit you, the schools and the cities and towns. They're in agreement. The number currently is being, the POs are being expensed in the wrong year, and then you're bringing them back, the ones that aren't expended the next year, you're bringing them back as revenue. That's the improper way to do it. You should not be expensing things until they are paid. If they are not paid, they should be set up as an encumbrance. Next slide. All of the encumbrances, so you take the appropriate budget line item and encumber it if you have an outstanding purchase order at the end of the year, should be grouped together, and they're set up as one encumbrance at the end of the year. You debit your undesignated fund balance, credit your reserve for encumbrances in the fund balance section. You should be doing this for June 30. I know no one's doing their closing entries on June 30, but as of June 30, when you do your closing entries, you should be setting this up. Next slide, please. And then just like I know you're not doing your closing entries on June 30th, you should be doing, theoretically, reversing entries on July 1st. Whenever you open your books back up, you should be reversing them. And you should be doing the exact opposite entry. You take the money out of encumbrances and put it back in undesignated. At the end of the year, when you run all your expenses through there, anything that had been an encumbrance that was paid during the year would run through the expenditures and reduce undesignated fund balance at that point. If it was something that you encumbered and then you never ended up paying it for whatever reason, then you would not have to bring it back as a revenue. You should be setting up and reversing your entries there, and do not net them, please. You should be, if you set up an encumbrance of $100,000, then you should be reversing an encumbrance reservation of $100,000. If the next year, if you set up a reservation of $100,000 and the next year your reservation for encumbrance is going to be $105,000, you should not just be adding $5,000 to your current reservation. You need to set it up and reverse it, and then set up a new one the next year every year. It makes the books much cleaner to go through, and you can track where things are and where they're not. If there's a mistake made, it's much easier to untangle that way. You should be making those entries on an annual basis, as I said. When outstanding purchase orders are paid, they should be booked to expenditures, which will pass through undesignated fund when the closing entries are made. Expenses should not be paid against the unclosed reservation of encumbrances. So not only should you not be netting in the on a year-over-year basis with it, but don't make any entries to the encumbrance other than setting it up and then reversing it. Don't pay the encumbrance out of the encumbrance reservation. The reservation for encumbrance should be reversed at the start of every year. Next, please. The last thing I'm going to go over is the trial balance. This is the system-generated trial balance you have. This should equal and match the general fund column of the combined balance. So cash number, we should be able to trace everything on here in the last column here. The ending balance column should tie out to what's in that first column on the combined balance sheet. You look through it, I know that this one does tie out, so you can use it as a reference. You are going to roll certain things together. You've got your withholdings they have here that roll all of those together into one line, but other than that, everything breaks out. And if you keep going, scroll through this, please, to the revenue line. Wanted to keep all of the pages in here just so you scroll through. We have there's the one back, there you go. I was mentioning this is the number, that 56,189,913.80. That is the total revenue for this district. That number is the number that we're using on the roll forward, the analysis we went over a few minutes ago down in that bottom section. These are the reconciling items. That 56,189,913.80 is the number you will find on that. You skip to the next slide. One more slide. One more slide. There we go. Yep, there is your total expenditure number, the 55,658,968.39. That number is also on the roll forward. Those numbers should work out, and that's how you roll to your current fund balance. At this point, I am going to turn the rest of the presentation over to Katie Scopoletti, who will walk you through the rest of the forms. Thank you. I'll be back for questions.
Hi everyone, I'm Katie Scopoletti. I'm one of the Boston office field reps. I predominantly handle the Cape and the Islands area and work on these submissions annually. So the portion that I'm going to go through is actually a very critical part of the submission. It's the year-end checklist. So this is essentially a tool for both you and us in terms of making sure the submission is complete and our calculation is reasonable. So essentially, we will come up with a calculation that is based off the submitted financials that Andrew just went through. And then we look for those sources of your excess and deficiency further in this checklist. On this front page, some of the questions are just like initial checks in terms of, did you submit all the required information? Is there any variance on your cash reconciliation? Question 2 regarding that, it should match your cash reconciliation form, which I'll go over later. Also, what Andrew spoke to earlier, question 3, do your accounts due to and from offset? That's also a good check. And it'll be like, have all of your payables, encumbrances been recorded? Question 4. The purpose of question 5, has a regional school committee voted to establish a regional transportation reimbursement fund? We're just to identify if it's a general fund or special revenue account. And then also the self-insurance on question 6, you know, there's a few districts that still have this program. So the purpose for this question is to identify if you have it. And then also a check for us on item C is the incurred but not reported amount. We verify that what's listed on the checklist matches what was listed on the balance sheet. And again, that can also be a check for you as well, because you want to make sure that what's on the combined balance sheet matches the forms you're submitting to us. Next slide, please. The second portion of this checklist, this is probably, I would probably say this is where most of our questions or needing us to unlock to update things occurs. Question 7, essentially what this question is trying to do is trying to say, based on what we certified last year, what have you voted from that excess and deficiency for next year's budget in terms of that should be a reserve for expenditure on your balance sheet. So column A, if you're starting with the last certification amount, you would list any votes from that so that we get the ending balance, which we will use later in the proof to know what was available as excess and deficiencies. We would expect the amount that's in column A for the $2,045,000, we would expect to see that amount identified in column C, and we would see it as fund balance reserve for expenditure. We do an additional check here of making sure that what's reported here is what matches on the combined balance sheet. So if the $2,045,000 is noted as a reserve for expenditure here, we're verifying that that's what's reflected on the combined balance sheet. A lot of times we see, I'm just trying to give you guys kind of a heads up of, you know, some issues we see. I feel like there's a lot of confusion with the fund balance reserve for expenditure column C. This really is just for the expenditure reserve. This is not for the entire equity section. A lot of times we get that. So if there's any question on this, feel free to reach out to the reps. Like, we would rather help you get it submitted correctly once than have to unlock it multiple times. So if there's anything unclear, please take this opportunity to reach out, especially during this webinar. And then I'm going to go to the next question 8, which is also another source of a lot of questions. So this essentially is, we want to know, we want to identify the items in your budget, and we want to make sure money's identified so we avoid over certifying. So common mistakes that we can see here is like a capital assessments including is included in the operating. The FY21 budget, essentially we use your FY22 budget column. That's what we use on the calculation to determine the 5% threshold. So it's important that this information is accurate. One thing we also expect to see is for the FY21 budget, we expect that to be the same as what you submitted the prior year. That's a check that we do. And unfortunately, we do see that for some reason that changes. But that's the expectation. This should not change. And again, any variance from your FY21 budget to the FY21 actual should get captured. And ultimately that will feed into the proof, the total variance. Some line items, I'm just going to note, there will be a slide showing it, but we do have other, and I'll get into like the detail of what we expect for that. But essentially this is a very important part right here, because this is actually captured with how we determine what the excess is. So it's very important. If you have any questions on this, feel free to look at your prior year submission, reach out if you have any questions. This is just really a very important part. And we only want general fund money captured here as well. So that's just another point to capture. Question 9 is about reporting unbudgeted revenue that's not included in number 8. This might be like an example of like a grant being closed. Again, we don't really see a lot here, but that's just an example. And then question 10, report the total of all the unencumbered, unexpended appropriation balances closed to the excess and deficiency. So this is, I would probably say this is probably number 2 or 3 of the most common areas that when we find we're doing our free cash proof. A lot of times it can be from here. In terms of what this question is really asking is, you know, take a look at a budget report, look at all of the positive amounts that were not spent by year end, and that should be what's put in here. So like an example would be, you budgeted for $10,000 of supplies, but you only spent $8,000. There's a positive turn back of $2,000. So essentially you want to identify those items on your budget report, and that's what should comprise this amount. Again, feel free to reach out if you need anything. Next slide, please. So this is what I had referred to on that first sheet. You'll have like an other revenue amount, and there'll be a link to this page, which essentially just wants the detail to identify them. So the most important thing to reiterate here would be, you know, don't just label as miscellaneous. We want some detail to identify it so we understand what they are. So that's really the biggest thing for this part. Like, it can't just be like a generic miscellaneous title. We need additional information. And that, like sale of district property, that's an example of one. And that is, and this should tie to what is on the previous page that's listed. So that's another check there as well. Next slide, please. Okay. So that was the checklist. I'm going to transition to the cash reconciliation page. And so this form has a few parts to it. Essentially, it starts out with the beginning, which is the total treasurer's cash and investments, which is its own form that we verify the amount that was filled out there. It flows in here, that's why it's orange, but we just make sure that it matches what was submitted. And then we take the accountant and auditor's records for what they have, which it's based on the balance sheet, so it's by fund. And as the rep, we make sure the amounts that you listed here are what were reflected on the financials submitted. And this third part is reconciling items. Like, as you can see, you know, the treasurer and the accountant's records in this scenario had reconciling items. We understand there will be some items such as warrants payable, petty cash, again, outstanding checks. So the important thing here too is make sure that your reconciling items are identified. We don't want just like variance or miscellaneous. We want to know what is creating the variance, because depending on the explanation, if it's not timing related, it could be a reduction to your calculation. Another thing that is important here too is the signatures. So both the treasurer and the accountant, which is often the business administrator, are attesting that this information is accurate, because this is an important check to make sure that the treasurer's records and the accountant's records, you know, match or to have those reconciling items identified. Next slide, please. And this is the treasurer's year-end cash report. This is the total that fed to that cash reconciliation report. And the purpose of this form is to identify the classification of the cash and investment. So, you know, the type of checking accounts and the investments, if it's trust funds. And then there is an attestation, you know, that it agrees to the general ledger. And again, this is signed by both the treasurer and the accountant. There is an attachment that we also require with like additional detail. The gateway form is kind of a higher level. Next slide. We have an Excel, as Andrew showed on our landing page, there are templates. This is one of them. It's the year-end cash report. And essentially, this is an Excel template that lets you fill in detail. So you told me that you had trust funds of this amount, but what institution are they held for? What's the purpose of it? Exclusive detail is in this Excel version that ultimately we make sure that the totals listed on this Excel tied to what's in Gateway as a check. Next, please. This is the statement of indebtedness. So similar to the year-end report, this is kind of a higher level review. We want to know what the long-term and short-term debt is, and also the total and unauthorized amount. This is also signed by the treasurer and the accountant roles in Gateway. Next slide. And same thing, this has a template also on the landing page that can be downloaded. And this is also looking for more details. So, you know, you originally said you had long-term debt. Okay, it applies to school buildings. We want to know what's outstanding from the prior year, if anything's been newly issued, retired, and the outstanding amount, also interest. And then similar to what I said on the cash reconciliation form, we tie out that the totals listed in the Excel tie to what you put in Gateway. And then additionally, with the statement of indebtedness, we do make sure that the higher level amounts that you put in, like short-term, long-term debt, tie to the combined balance sheet amount and what you have listed as well. And this also has spots for signature, but you do also sign on the Gateway page as well. Next, please. Again, this is just more detail on the short-term debt, you know, just what they're for, same idea, the type of loans, what the amount is. So we get the total short-term debt. Next slide. And this is the authorized and unissued, same thing, just more detail, more of a breakdown. And then we just make sure what is listed as the total unissued is what you listed on the Gateway form. And that actually is a common area for some reason that does not match. So that is the intent of what needs to get transferred over from the Excel to Gateway. And next slide. So that will end my portion of the presentation. This is the page for the municipal finance training. There's a lot of resources, a lot of data. I would always recommend probably starting with the municipal finance training resource icon. And then there kind of are categories if there's anything that you're interested in. But I'd always say start with your field rep. Honestly, if there's anything that you have a question on in the submission. And, you know, early and often is better. You know, we do get very busy in the fall. So anytime, like if after this webinar you have questions while this is fresh on your mind, please don't hesitate to reach out to the field rep. And that will do it. I think we can open it up to questions.
Great. Thank you both so much. And thanks again to everyone who's joined us here this morning. Just as a reminder, we will have the recording of this presentation available later for everyone to watch as many times as necessary. And feel free to just send it along to anyone else who maybe wasn't able to attend. We do have a couple of questions already, so we'll jump into those. Before doing that, I do just want to ask one person to maybe clarify their question, and then while they're doing that, we'll jump into some of the others. But there was a question about, won't this affect our ability to run current year budget reports? If you wouldn't mind clarifying what this is, because unfortunately I wasn't able to connect it with whatever was being talked about at that specific moment. So if you wouldn't mind clarifying, I promise we will get to it. I'm going to try and steer the questions towards the person who is presenting on the topic. And if I don't do that very well, then I apologize, but I will most certainly try. So Andrew, I think we're going to start with you. The first question was, if the fiscal year 2023 budget includes a revenue appropriation from the June 30th, 2022 transportation fund balance, does this fiscal year 23 appropriation reduce the excess accumulated transportation fund balance at 6/30/2022?
Hold on. That's a lot.
It's a big one. Yeah, sorry.
One written in the chat or something somewhere? Where is that somewhere?
Yeah,
I can.
Yeah, if you click on Q&A, it's the one right at the top there.
I do not see that one. They may only send it to you.
All right, I will put it in the. I will put it in the.
Yeah, if you can put it in there. Yeah. Okay. Yeah. Let me. Okay. So if the 23 budget includes revenue appropriation. If the 23 revenue includes a revenue appropriation from the 22 trans. Yeah, you wouldn't if you've appropriated it for the current year's budget, it's not going to be held against the fund there. So you're all right with that. That's the question that they're asking. You're okay. It does not count against the accumulated. If that money's been spoken for and expended towards, or encumbered in this case, towards the next year's budget, you're fine.
Great, thank you. I'm going to make Deb a co-host as well, but while I do that, Katie, I believe this one would be for you. When you were talking about the items on the balance sheet checklist, what if the vote was taken to establish the fund, but after using for 1 year, the committee chose not to use it going forward?
I think I would need to know more detail in terms of the timing. I don't know, Andrew, if you have any thoughts on that.
You can do, it's fine. If you voted to accept the fund, that's fine. That's what we want to know. So that way we're looking to make sure it's allowable fund on the special revenue detail. There are 3 things you can basically do with that money every year. You can appropriate it in the general fund. You know, you can appropriate the money that's coming in from the state that year, or a portion of it towards your upcoming budget, in this case the 23 budget. You could not appropriate it into the budget and just let it flow through to your special revenue account, Or you could do a combination of the two. If you're getting $1 million, you put $600,000 in the general fund budget and 400,000 flows to the special revenue account, and you keep it there. The thing that you can't do, or we don't want, I mean, you can, and once money's in the special revenue fund, you can vote it and spend it however you want. Well, for any of the allowable purposes it's for. But if it comes out of the special revenue fund, it does not go on the general fund revenue budget question. We have the question there that Katie showed on the checklist. That is the general fund revenue budget. That's the one we calculate your 5% on it. Money's coming from special revenue funds do not count there. So only the money that was appropriated originally for the general fund budget from the current year gets counted towards that piece of the budget. You can spend money for the budget, just like you can spend all of your other special revenue funds towards anything that they're allowed for, but they do not, special revenue fund money, the monies that come out of special revenue funds do not go in that general fund revenue budget. Frank, if I can bump in here for a minute, one of my colleagues had put in something here. They wanted us to remind everyone that if you have any receivables or deferred revenues, you need to make sure that the detail and the combined throughout the balance sheet tie out. So if you have a deferred revenue in the special revenue fund for something, but it doesn't have a like-wide receivable, you need to make sure that appears on the detail for the special revenue. Thank you.
Yeah, no problem. And Deb has joined us as well. And Deb, I wasn't sure if there was something you wanted to follow up on that one or another question.
It was a previous question, so I just want to circle back on that transportation question. So if you appropriate money for your 23 budget from your 22 balance in your transportation account, you should encumber that so that it reduces your fund balance at the end of the fiscal year, similarly to what you would do for an expense in the general fund. Because what we do is we look at your transportation, we look at your circuit breaker, and you're only allowed to carry forward 1 full year of reimbursement for those accounts. And so if we see that your balance is in excess of that, we'll add it back to your excess and deficiency. And so if you don't encumber those funds, they will appear artificially high. And we don't want that to happen. So you would encumber those funds similarly. If you're carrying forward a balance to apply it to the subsequent year's budget, you should encumber those funds somehow.
I think that may have answered Melissa's question about entries for the remaining encumbrance. So if you
let me go over that one if I can, Frank.
Oh yeah, absolutely.
So the question was, in the next fiscal year, if you spent 90 out of the $100 that you encumbered, what would the entry be for the remaining $10? There is no entry in this case. That's why you do this. You set up the $100 encumbrance on June 30th. And then when you do your reversing entry, you put that whole $100 back in the general fund, in the undesignated fund balance. So if you only spend 90 out of it, that 90 is going to come out as an expenditure during the year. The other $10 is still in undesignated. There's no further entry. This is why the current system, or the way some folks are doing it, is inappropriate. You then have to get that $10 back into the general fund, and you're taking it in as a revenue, where it's not a revenue. It's an unspent expenditure that you shouldn't have recorded in the first place. It wasn't an expenditure when you first recorded it. It was an encumbrance. You thought you were going to pay it, but then you didn't end up paying it for whatever reason. So that's why it's important to do this with the closing entry and then the reversing entry. That $10 will never have to be have a separate entry for it in any way. It's already in undesignated. Thank you.
Thank you. So Cheryl was able to kindly, she got back to us on the question she'd asked, also on encumbrances. So she asks, if you reverse the encumbrance entry on July 1st and payments for the last year's payment of an outstanding purchase order is posted to this year's expense account, Won't we lose our ability to manage the current year's budget? And then she provides an example. For example, the outstanding PO is for $100 to account A, and this year's budget for account A is $1,000 and fully expended. Our budget report will show a negative $100 balance, but $100 of that expense is for the last year. And that's also in the chat if you'd like to review it.
Yeah, no, this wouldn't, it's not going to come out of the current year's budget. You're going to, like I said, you're putting it back into undesignated when you reverse the entry, and all of the expenses are paid out of there. So only the current year numbers would hit the budget line for that thing. And if you spent the full $1,000 from that budget line, and then you also paid the $100 encumbrance you had, $1,100 would hit your expenditures. But that only the $1,000 that was for the current year's budget would hit the budget line.
Some accounting systems have a column right at the beginning of your expenditure report that shows the encumbrances carried forward from the prior year. And then the next column would be the current year's budget. And then you have an appropriate, expenditure column. So really the prior year's encumbrances really in effect get added to your beginning budget number.
Sorry about that, I was on mute. Another question, what account do we charge expenditures against when paying the reserved for encumbrance invoices?
I think I just want to chime in here, just also like if you're noticing that you have a lot of questions that might be specific to you and your reports, I think you should reach out to your field rep that can walk you through your submission and maybe like your system reports. Like, please ask questions. But if you're finding that you have a lot of questions, this would be a sign that you should reach out to your field rep to look at your submission. Just throwing that out there as well.
And you're not charging a current year budget line for the reserve for encumbrance. So you're not charging anything in your current year budget. It's not, that's why you encumbered it, to bring it over as an additional when you set up that reserve for encumbrance, you're carrying forward some budget from the previous year that allows you spending authority for that up to that amount in the next year. So you're not charging your current year's budget. That person who, yeah, I know who that is. Lorna, you can certainly reach out to Kim or myself down the road about the encumbrances. It's more of a comment than a question there. And then someone had a question about Deb's.
Yeah.
Sorry, go ahead.
I'm not sure what are you talking about Patterson's question, Andrew?
Yeah.
I'm not sure what she means in the last sentence. We netted the expense for anticipated use of 100,000 in the general fund. And that, I think what you're saying is you're estimating those funds in the budget for expense in the next year. But at the end of the year, you need to somehow reserve those funds, indicating that they're already accounted for expenditure, accounted for to be spent. I think you're referring to a budgetary document that you would be looking at. And again, any revenues coming from anything other than general fund revenues. So if you're talking about circuit breaker or transportation revolving or school choice, those amounts should not be included in your budget column on the checklist, because we're only looking for general fund items. And also any funds coming from special funds don't count toward your 5% for your budget. So your budget isn't grossed up by those amounts to calculate the 5%. Your 5% is only based on general fund items.
Right, yeah, to follow up on what Deb said there, we're not saying you can't spend those monies. You just don't include them in that question for us. You can spend all of your special revenue monies for anything they're allowed to be spent for. And if you're spending them in the future, in those two, well, anything, but if you're spending them particularly in those two things that we look at, the transportation fund and the circuit breaker, then you need to encumber anything spent for the future year. So we know to take that away from what you have counted towards your limit. But it just does not include those numbers that are spent from special revenue, just are not included in the general fund revenue question. We're not saying you can't spend them for these purposes. I'm going to have a field rep follow up with Jay afterwards. I'll have Tim follow up with him on that to explain the specific mechanics of what he's doing.
Okay.
Or I'll do it, either Kim or I. Anything else?
Another one just came in. Oh, thank you from Jay.
Yeah.
Okay. All right. Well, again, as both Katie and Andrew mentioned, if you have any specific questions, would encourage you to reach out to your individual field representative. Also, as Katie mentioned, I would strongly encourage everyone to visit our website, mass.gov/DLS, and visit our new municipal finance. Well, I guess it's not really new anymore, but visit the Municipal Finance Training and Resource Center for lots of good information that would be helpful in a wide array, again, of municipal finance topics, but hopefully on this one as well. Unless there are any, the PowerPoint will be available on our website and on our YouTube page following this presentation, probably sometime within the next couple of days. We will send an email directly to each and every person who registered with a link to the recorded presentation and the slides themselves. So they should be in your inboxes within, I don't know, the next few days, Monday at the latest, I would say. Take some time to edit and post and upload the video. So there's a few days delay there, but it should be with you shortly. Any others? All right. Well, we'll call it there. Thanks again to everyone who joined us this morning, and thank you again so much to our presenters. Hope that everyone who joined found it helpful, and I would encourage everyone to stay on the lookout for our next round of webinars that we'll be hosting beginning this summer. Take care, everyone. Have a good day.
Thanks, everyone.